had a good year in the 12 months to 31st of May 2021. The company's net asset value, or NAV, per share grew by 19.6%, and at the end of the year, net assets stood at £1.9 billion. Since PIP was formed in 1987, it has delivered excellent long-term performance, with 11.8% average annual NAV growth over 33 years. And the company has outperformed the FTSE All-Share and MSCI World Indices over the same period.
PIP's share price grew by almost 32% during the period, and total shareholder return was 109% over the last 5 years. In line with the wider listed private equity sector, PIP shares continue to trade at a discount which we and the board believe is unwarranted. We are focused on increasing the profile of PIP and extending its appeal to a wide range of investors. As part of this, at the forthcoming AGM, the board will be proposing a split of PIP shares whereby each existing share will be split into 10. The aim is to improve the marketability of PIP shares and make them more accessible to certain investors, including regular savers who may wish to invest smaller amounts and buy smaller quantities of shares.
Through PIP's actively managed and well-diversified portfolio, shareholders can access the breadth of the private equity universe and companies at different stages of growth. While the company's strategy is to maintain a healthy mix of stages, PIP continues to emphasize growth and mid-market buyout investments, where there are more opportunities for value creation and more routes to exit. During the year, we saw strong performance across all segments of the underlying portfolio. Our portfolio value increased by 36% prior to foreign exchange effects, driven by strong exits and valuation gains in our core growth and buyout segments, while venture performance was due to the successful IPO of a portfolio company in the information technology sector. We believe that PIP's growth orientation helped underpin portfolio performance despite the challenges brought about by the global pandemic.
PIP's flexible investment approach means it can increase or decrease its allocations to different deal types according to where it sees opportunities. Through Pantheon, PIP's manager, the company can access top-tier invitation-only primary funds, co-investments, where PIP invests directly in an operating business, and secondaries, where PIP replaces an existing investor in a fund or a company. Co-investments are sourced for PIP through the vast network of relationships that Pantheon has built up over many years, and due diligence on these direct deals is carried out by a specialist global team at Pantheon. The secondaries market is evolving, and single asset secondaries, where the private equity manager has carved an individual company out of an older fund that's coming to the end of its life and moved it into a continuation vehicle, are a fast-growing part of this. Pantheon has considerable dedicated expertise in this specialised part of the market and has already been able to select compelling opportunities for PIP. During the period, PIP committed $150 million to the Pantheon Secondary Opportunity Fund, allowing it to access these high-quality assets on favourable terms. The emphasis on co-investments and single-asset secondaries will increase the concentration of individual company assets in PIP's portfolio. It's worth noting that already 46% of PIP's private equity portfolio is in direct holdings. In addition, we, along with the board, have identified the opportunity to increase investment pacing while maintaining our disciplined investment approach. Both of these actions are intended to provide a boost to NAV growth over time. Altogether, PIP committed just under £240 million to 33 new investments during the year. Our active deal pipeline, particularly in single asset secondaries and direct co-investments, points to a busy start to the new financial year.
The presence of Pantheon's investment teams, comprising 113 professionals around the world, means that through PIP, shareholders are able to access a truly global portfolio and the deal flow emanating from the most developed market in the USA, as well as from Europe and Asia and the emerging markets.
The majority of PIP's portfolio has experienced limited negative impact from the COVID-19 pandemic. Around half of PIP's portfolio is tilted towards the dynamic information technology and healthcare sectors, which have held up well during the pandemic and indeed have benefited from many of the secular trends that have been accelerated by the crisis. For example, the move towards remote working and e-commerce and the greater focus on health and well-being. Please visit PIP's website for case studies on the different companies that PIP is invested in around the world.
PIP manages its maturity profile to ensure liquidity while also maximizing potential for growth. PIP's average fund age of 5.2 years reflects our focus on maintaining a healthy maturity profile, and this is achieved through a mix of primaries, secondaries, and co-investments. As a result, even against the backdrop of the COVID-19 pandemic, PIP's portfolio continued to generate strong realizations during the year, with distributions of £319 million, or the equivalent of 22% of its opening portfolio value. Calls from existing commitments amounted to £120 million, equivalent to 22% of PIP's opening undrawn commitments. This resulted in a net cash inflow from the portfolio of £199 million. The better-than-expected level of net distributions meant that PIP has maintained its strong balance sheet position, ending the year with net available cash of £198 million. In addition to this, PIP has access to an unutilized £300 million loan facility, the term of which has been extended so that it now expires in May 2024. Further provision allows the company to increase committed facilities to £350 million if required. PIP's available financing, along with the value of its investment portfolio, provides comfortable cover of over 4 times relative to its undrawn commitments. We believe that the combination of PIP's strong balance sheet and the cash-generative nature of its portfolio positions PIP to take full advantage of future investment opportunities.
Strong environmental, social, and governance principles are embedded into our investment processes, right from the start of the due diligence process through to exiting the investment. Pantheon is also a strong promoter of equal opportunity, diversity, and inclusion. We use our position on over 485 fund advisory boards worldwide to promote high ESG standards on behalf of PIP amongst our private equity managers and their portfolio companies. Governance in private equity is strong, and this is also reflected on the PIP board. Susanna Nicklin, who is PIP's Senior Independent Director and has been a member of the board since November 2011, will retire following the conclusion of this year's AGM. Mary-Ann Seagart, who has been a member of the board since October 2019, will assume the role of SID. Take a look at the annual report where 2 of PIP's directors, private equity veterans John Burgess and John Singer, discuss how the private equity market has developed over the years, the benefits it offers, and why they believe PIP works.
The indications are that private equity has been left relatively unscathed by the COVID-19 pandemic. At the end of 2020, new deal activity and exits were only slightly behind 2019, and fundraising was surprisingly strong. This trend has continued into 2021. Furthermore, performance through the crisis has been robust, and the asset class has demonstrated lower volatility than public markets. We believe that this is a direct result of the best private equity managers' hands-on approach and their experience of actively managing companies through uncertainty. Equally, Pantheon's own experience, with almost 40 years in the private equity industry and over 33 years' experience of managing PIP through several cycles, has been reflected in PIP's resilience and the strong performance during the last 12-month period. We cannot predict how the crisis will develop from here, but our experience and our managers' proven ability to be flexible and innovative underpin our measured but confident outlook for PIP in the future.
If you have any questions or would like more information on PIP, please visit the website, follow PIP on LinkedIn, or contact the team here at Pantheon.